Good morning, ladies and gentlemen. This is Amit Madan from HT Media Group. I would welcome you all to our Q4 and full year 21-22 earnings webinar. As a reminder, all the participants will be in a listen-only mode. After we are through with the presentation, there will be an opportunity for you to ask questions. I now hand over the call to Ms. Anna Ibrahim, Head Investor Relations. Thank you, and over to you, Anna.
Thank you, Amit. A very good morning to everyone. On behalf of HT Media Group, I welcome you all to our earnings webinar to discuss the financial results of the quarter and the full year 21-22. On the call with me today are Mr. Piyush Gupta, Group CFO, Mr. Sandeep Gulati, CFO of Hindustan Media Ventures Limited, Mr. Parvez Bajan, Group Controller, and members of my investor relations team. The financial results of Hindustan Media Ventures Limited was declared last Thursday, the 26th, and the results of HT Media was released last Friday on the 27th. Hope all of you had an opportunity to go through the results. We will be discussing the highlights of the same on today's call. Kindly note that our remarks will track with the presentation on this Zoom webinar. This presentation, along with the financial statement, is available on stock exchanges and the investor relations section of our website. I'm now on slide 2 of our presentation, which captures a disclaimer regarding forward-looking statements. This is on your screens right now. As per practice, we do not provide specific revenue or earnings guidance, and I request you to keep in mind the above guidance with regards to all the discussions that happened during the course of the call today. Moving on to the slide 3, the next slide gives our chairperson's comments on the performance of the company for the quarter, and I quote, "In the last financial year, economic and commercial activities remain volatile on account of a multitude of external factors. In the first part of the year, the second wave of the pandemic affected lives, livelihoods, and businesses. As the wave subsided, business activity picked up and was supported in the third quarter of the financial year by the annual festive season. However, the last quarter of the year saw some disruption on account of the third wave of COVID-19 caused by the Omicron variant, geopolitical factors such as Russia's invasion of Ukraine, which resulted in high inflation and a sharp rise in commodity prices. Against this backdrop, advertising revenue from our print and radio businesses in the last quarter have grown over last year, owing to sustained efforts of our teams and gradual improvement in the business environment. Circulation revenues too are on an upswing. Digital revenue grew handsomely. The full year saw good growth in revenue across businesses and higher operating profit margins. In the current financial year, we hope to build on the momentum we saw last year and do even better across businesses. The external environment does pose some challenges, and we will be monitoring and adapting to these as events unfold. As always, we remain committed to providing incredible and engaging news, information, and entertainment content to our audience." Quote ends. Moving on to slide 4. This slide captures the agenda for today. We will begin the performance update with comments on our consolidated financials for the fourth quarter and full year, which will be followed by detailed remarks on our print, digital, and radio businesses. We will open for Q&A after the presentation concludes. With this, I hand over the call to the Group CFO, Mr. Piyush Gupta.
Thank you, Anna, and good morning, everyone. Welcome to our results call. I am on slide number 6. If you can see consolidated financial summary. If you can see on a full year basis, our total revenues grew 26% to 1678, and our EBITDA grew to 204 crores, a growth of 127%. Improvement in EBITDA with a 12% margin and full year at 7%, up by 127% versus FY21, despite impact of multiple COVID waves during the fiscal, as also the escalated newsprint price, which we will be speaking about subsequently. However, in the second half of the year, we had a better performance with EBITDA coming at 164 crores versus the first half of 40 crores. Consolidated PAT, as you can see, at rupees 90 crores in FY22 versus 65 crores lost last year, which is an improvement of 84 crores, and the cash position remains strong within the group. Moving on. If I just drill down in the business unit performance, we first look at the print performance, on a full year basis, the print revenues grew 33% to 950 crores from 717 crores earlier. Circulation revenues also saw a handsome increase of 17% to 211 crores. As a consequence, operating revenue grew 33% to 1269 crores with the operating EBITDA at 120 crores with a 9% margin. EBITDA at last year's level, despite higher newsprint prices, is a commendable achievement because the newsprint prices have grown substantially since the second quarter of this fiscal review. Moving on. If we just have a deeper look into our English print media business, our ad revenues on a quarterly basis have grown 12% YOY, and on a full year basis have grown 46% YOY. Our circulation revenue on a quarterly basis have grown 122% YOY, and our full year growth is 130% YOY. If we drill it down into certain categories such as real estate, banking, finance, FMCG, education, and entertainment grew, while retail, industrial, and e-commerce remain subdued. If we have a same look at our Hindi business, our quarterly ad revenues grew 1% or virtually flat on a quarterly basis YOY. On a full year basis, they grew 20%. Our circulation revenue grew 3% on a quarterly basis and 7% on a full year basis. These numbers are all YOY. At a category level, categories such as retail, banking and finance, health and fitness grew, while autos, FMCG and education remained subdued. Our radio performance, our full year radio revenues grew to 101 crore at 37% growth, and operating EBITDA, we were able to curtail our losses to an EBITDA loss of 15 crores as against a 62 crore last year. Operating EBITDA loss have been substantially reduced, and this is the second consecutive quarter where we managed to turn in EBITDA break-even to a marginal EBITDA profit sequentially. Moving on to a last segment on our digital performance. As you can see, our operating revenues have grown quite substantially at 47% to 132 crores, with operating EBITDA coming at virtually a break-even, and full year EBITDA are around the break-even levels. With that, we come to the end of the presentation, and I hand it back to Anna.
Thank you, Piyush. We will now begin the Q&A session. You can click on the raise hand option, which will enable the moderator to unmute you for posing your queries. Please restrict to a maximum of 2 questions per participant so that we may be able to address questions from all participants present. We will wait for a few moments while the question queue assembles. Ladies and gentlemen, a reminder to all participants that you may use the raise hand option on your screen if you have any questions and create the question queue. The first question is from the line of Mr. Pawan Tororia. Mr. Pawan, please unmute yourself and ask your question.
So basically, my question is regarding HMVL. So we have seen almost similar level of cash in this year as well. But for last 2-3 years, I don't see any plans for better utilization of that cash. Like it's just giving some interest income, but that is also fluctuating. So any concrete plans on utilization of that cash which is just lying?
Pawan, thank you so much for the question. So 2 parts to your question. First of all, interest income, it's not a little bit interest income, it's a reasonably well-governed treasury. So if you look at the details of the interest income, it's a substantial 10% post-tax kind of a yield that cash is earning. However, having said that, as you are aware, in HMVL, we are already incubating our HT Labs business. This business is at still a nascent stage, but very soon we will be coming to the market and highlighting the various things that we are deploying this cash on to build all the businesses and properties future facing. There is a clear plan to utilize this cash, but as you know, HMVL right now, is a substantial, cash, company with substantial amount of cash on the balance sheet. But we will not unnecessarily do things which we shouldn't be doing with this cash, but we'll be investing this cash to create businesses for future, and you'll be soon hearing from us.
Thanks. Thank you.
Thank you.
The next question is from the line of Mr. Anurag Podar. Mr. Podar, please unmute yourself and ask your question.
Piyush, I have one question with respect to the digital business. So what I understand, there was a plan by the company to merge all these, group assets like DG content and, the radio business and all, which are separately listed. So what are the plans over there? And secondly, there was a sharp growth. So what led to that, sharp up growth? Or maybe we are looking at something bigger into that, because the competitors are going large, investments into that.
Anurag, just tell me the second part of the question. First part I've understood.
What are the group plans for the digital business?
Okay, fair enough. Good, thanks. So Anurag, first on the scheme of reorganization that we had proposed, which unfortunately because the shareholders did not accede to that, couldn't go ahead. Now, we definitely still believe that we have to, again, put down some scheme which is acceptable to the shareholders, because the whole thought process was that we have to put a lot of growth capital into our digital companies and our radio business, which is now again coming back from a COVID overhang. And hence we had proposed the scheme. The investors have at this point in time, not acceded to the scheme. So we will have to come back with a new plan, and you will hear from us, but we definitely want to do that in the larger interest of all the shareholder, majority and minority. As far as the digital businesses are concerned, as I just was articulating to your colleague before you, Pawan, that we are investing in a labs business in HMVL, and these are all digital businesses which are future-facing businesses. They are at various stages of construction, and we have done a soft launch of some of these businesses. I don't want to specifically call them out at this point in time, but sooner rather than later, we will be taking these products to market, and we are already testing the monetization of products. So a substantial investment will happen behind these digital products, which will create a sustainable revenue stream, and hence they'll be all accretive from a shareholder perspective, but it will take some time. We've been at it for some time. I hope that answers your question, Anurag.
Yeah. So I have a follow-up on this. So does that mean maybe you would rework the plans on, on that merger again? Because that's a time-consuming business, right? So approvals, then NCLT and all.
It is a very time-consuming thing, Anurag. Actually, personally, I feel slightly sad that the shareholder did not bless this whole scheme. But we will have to have some scheme whereby we can drive the synergies between our legacy media businesses and the new businesses that we are creating. And we will sell the messages again to the shareholder. But as you know, under the SEBI process, the shareholders will have to bless this thing, otherwise it will not go forward.
Okay. So what business HT Media within this company, the digital businesses into? And what is different, what DG does and what is here, because to her layman, that you cannot make out even on the product side.
So let me, on the product side, let me try to paint a big picture. On the DG, most of our news media products on digital platform reside in the Digi Content Limited, which have historically been there. Whereas in HT Media, there are online recruitment, online entertainment products, and we did the acquisition of VC Circle, which is, the publication in the VC and PE stage and the new companies fundraising and so on and so forth. However, we are now incubating a lot of businesses in this part of the business, not in Digi Content, And hence, at some point in time, we would like to integrate and kind of take this whole piece to the market forward. The new businesses that we are incubating are not in the new space, so they will be new businesses and they will be creating an independent revenue stream. That's broadly how our digital businesses pan out. Does that clarify your question, Anurag?
Yes, Piyush. Thanks a lot. Yeah.
Thank you.
The next question is from the line of Mr. Sumit Poddar. Mr. Sumit, please unmute yourself and ask your question.
Hi, am I audible?
Yes, Sumit, we can hear you.
Yeah.
Sumit, your voice is not very clear. I think there's
Thanks
some
for the
bandwidth.
opportunity. And can you please share some of your outlook as far as the
Sumit, though your voice is not very clear, but if I got you right, you were asking on the outlook on the advertisement revenues. Is that the question?
Yeah. What is the outlook for advertisement revenues? And similarly, on the raw material side, how would you look at the newsprint cost?
Look, Sumit, had you asked me this question at the end of December, just after we had exited the festive season, I would have said that our outlook on the ad revenues is very, very bullish. And, we saw that happening. But then came Omicron in January. And right now we are all talking about inflation and central bank taking actions and so on and so forth. So as far as the outlook on revenue is concerned, I would say it's still good. We have already built our plans and we are going for a growth plan. But really only after, let's say this first quarter, we will get a clearer picture depending on the macroeconomic situation. So that's the outlook on the revenue. As far as the outlook on the raw material cost is concerned, unfortunately, the outlook is slightly bleak at this point in time. This commodity cycle on newsprint that we have seen is already hit a peak, which has never been witnessed hitherto before. The geopolitical factors are definitely not helping. So I believe this commodity cycle is a slightly extended cycle. Though we've been able to do some smart contracts, and build up the inventory slightly ahead of time to have as much benefit to the P&L, but that can only shift it by about a quarter. So I personally believe the newsprint situation is going to continue on an escalated level for another couple of quarters before it peaks out and starts coming down. Look, eventually it cannot stay there and it cannot fall off the cliff very, very quickly, but I think it will be escalated for another couple of quarters.
Got it. And as far as the advertising revenues are concerned, or I mean, in your talks with your clients, how are they
Sumit, unfortunately, we can't hear you, Sumit.
Behaving in terms of, are they cutting down as of now, or kind of they are taking a watch and wait?
Okay, Sumit, so let me just...
I'm sorry about that. Am I audible now?
Yes, you are much audible now. Please go ahead once again, please.
Yeah, I was asking whether the customers are holding back on their spendings, or is it that they are yet to come back in full swing?
Well, Sumit, I would say you'll have to go a little deeper. I mean, category by category right now, as you see in the startup world, etc. Things are changing very rapidly. So that part of the business is definitely slowing. There are some other parts of the businesses, as I was articulating in my slide earlier, which are holding back, and there are some segments which are going ahead. So I think overall, it's a mixed bag, but I would say given the macro situation, there's a little bit of pressure on advertisement, but I believe more clarity will emerge after the first quarter of this fiscal.
Got it. That was quite helpful. Thanks and all the best.
Thank you.
Thank you. The next question is from the line of Yash. Yash, please unmute yourself and ask your question.
Hi, Piyush. Thank you for giving the opportunity. One question is with regards to HMVL, the new age business which you are talking, digital business, is this lying in HMVL now? Because we are seeing you have started giving segment, separate unallocated amount worth 55 crore, if I'm not wrong. So is that investment now lies in HMVL?
Yes. So I think my colleague Anna would like to speak about it. The
Yeah.
simple answer is yes, but Anna, please go ahead.
Yeah, so the digital, we have reported a segment called digital. That's revenues lie as part of HT Media division and subsidiaries of HT Media. There is the new businesses that we talked about incubating, and that definitely lies in Hindustan Media Ventures Limited, and it's part of the unallocated segment there.
Okay.
Yeah.
And in your investor presentation, this unallocated segment goes where? Is it a separate?
It is separate. It is unallocated. So we only talk about print, radio, and digital in the investor presentation. Unallocated we do not talk about because there are multiple. Till the incubation is at such a stage where there is a established business model which we separately start tracking and reporting, it remains in unallocated, so it's not covered as part of the presentation. It will be part of the total revenue, but not part of the business-wise segment details.
Any revenue in Q4 from those businesses, or still there is?
No, there's starting.
So that's the point, Yash, which I was making. We have still not taken those products to the market. We are still in a testing stage. Once they are taken to the market and the monetization starts, we will be bringing them to a segment, so you'll get more clarity on those.
Okay. And second question is your print business. Last year, when you had reported print business Q4 and full year, we were having operating EBIT of -6. And now this time when you have reported, the last year number, it is 126. There is a very huge gap. It is almost like 130 crores. So what has shifted between this report and the earlier report?
Hold on, I'm a little confused. Anna, would you? I don't have that detail.
Last year's investor presentation, FY21,
Yes.
you reported operating EBIT of print as -6. And now this year, the previous year number, it is showing print EBITDA as 126. So there is a 130 crore we have moved out. Some expenses might have moved out because revenue looks the same. It seems the expense has got moved out to the tune of 130 crore. Can you throw some light? What is that 130 crore we have moved?
Yes, I'll have to look at it. I'm seeing in the current investor presentation, the comparable last year number is 126, but you're saying in the last year presentation, that was -6. So, let me come back to you. I'll really have to check that one.
Yes, because even in your UFR, the segment of print, there is only movement of 10 crore. So where is that 130 crore, movement? Is there some error in the presentation?
No. There can't be an error. Yes, these are all tracking the audited numbers. But let me come back to you on this thing. We will put in a note to you, right?
Okay. Thank you.
Thank you.
Thank you very much, Piyush.
Thank you.
All the very, yeah, thank you.
Thank you.
The next question is from the line of Mehul. Mehul, please unmute yourself and ask your question.
Good morning. Good morning, Anna.
Morning.
Pleasure to connect with you again.
How are you doing, Mehul?
I'm all well, thank you. Actually, I have one question and one observation to make. You shared that regarding DigiContent and HT digital media streams, you will have to go back to the shareholder with a better proposal. Now,
yes.
my observation is that if you go back and look at what commentary you gave 2-3 years ago, while demerging these businesses, okay?
Yeah.
So the shareholder supported the proposal then to demerge.
Yes.
Taking your word at face value on why you want to demerge, so that these businesses receive focus. There was strategic intent in this direction that these businesses should sustain themselves. They would on their own generate enough return to justify the demerger, etc., correct? Now, now that the shareholders have voted against the resolution to merge these businesses, I think there needs to be serious rethink on why. It is not that your proposal, you give us a few shares lesser or few shares more, that shareholders will vote for or against a proposal. No, management commentary needs to be consistent. When you are demerging or merging a business, there has to be a 10-year, 20-year outlook because businesses can't deliver in 2 years, 3 years. The other thing is that, you will lose trust on Digi content. You have amortized, some close to 210, 220 crores. Amortization is over. The book value is wiped out. And now you want to add that lower sort of apparent intrinsic value. You want to merge it with HT Media. Obviously, shareholders are not going to pass it. So I think before you come up with a better proposal to merge again, I would say 2-3 years, build the trust and then go back to the shareholders. I would urge the board to, win our confidence back. It is just a observation and suggestion.
No, I think that's a great point, Mehul. So let me just react to that. And you're absolutely right. 3-4 years ago, when we had gone to the shareholders, we had said why we want to demerge, and we had given a certain commentary. And the shareholders agreed with us. They blessed the whole thing. It went ahead. And just look in the last 3-4 years performance of Digi Content Limited. I think we have lived up to what we had said. The business metrics all are pointing upward. However, there are 2 or 3 things that you'll have to understand and bear with me, Mehul. One is the reality on the ground. Because this business is having such a strong tailwind, and COVID has only accelerated that tailwind, we today have an opportunity to grow these businesses much faster than what we are currently managing to grow. However, there is a lot of financial resources required for that. DCL on a standalone basis does not have that kind of a financial resources. To the best of our ability, we borrowed those resources, from a sister concern, HT Media, but that's a publicly traded company and there are minority shareholders also in that. So I don't think this is a question of trust. I think what we saw, we've already done. As a matter of fact, what's happening is much bigger than what we had anticipated. And hence we have an inner desire of doubling down on the initiative. Why do you think we are incubating all these other businesses in HMVL? We are incubating all these other businesses in HMVL in spite of having a pure play digital company, because we don't have those kind of resources. Hence we decided to go back to the shareholders and ask for those resources. Now, I will interface with all the shareholders again, tell them what the reality is. Numbers are bearing me out. Obviously, I can speak to you about what our outlook of the future market on digital is concerned. But you as a consumer of various digital products in your personal capacity, in your professional capacity, already know that the digital had been reset basis COVID. And today we have a golden opportunity because we've got a business which is already showing a lot of promise in the last 3 years to double down. But we don't have the resources. And hence we are going, look, we can postpone this journey. DCL is already a cash generating company. They will, basis the size they have, they can grow incrementally. That's not a problem. But if you have to really double down, where do you get those resources from? That was really the underlying commentary. And that's what we went on to the shareholders saying that, look, the consumer preferences have changed post-COVID very sharply. Today, all the consumers who were hitherto only the legacy media consumers are today asking for bundled products. There are finite amount of resources in DCL. If we kind of merge this whole stuff, look, that's the whole reason. I think if the shareholders want to take a little bit longer view, Mehul, I think this will be a win-win situation. But of course, if we have not told the story well, we are willing to tell it again. But I think that is the only story that we have.
But Piyush, the optics are terrible. If you see after amortizing 210 crores, shareholders taking all the pain on Digi Content for almost 3 years. Now you merge it at a ratio also that is bad. All the shareholders who have trusted you and hung on to the share for 3 years, after demerger, it looks very bad. It appears as if it was just done to take 210 crores out of Digi Content. So anyhow, you rethink about it.
Fair enough, Mehul. Look, I understand your point. Look, if it's only about the swap ratio, Mehul, those valuers that we got, the bankers who kind of put the fairness opinion, I mean, we will call them back again. At the end of the day, we'll take the shareholders also along with us. But please understand, there are minority shareholders sitting on both sides. So it's not that we want to kind of play with that ratios. That was never the intent. Why should that be the intent? I mean, from a majority shareholder point of view, it's a mirror shareholding, right? So there is no inner desire. But the whole point was, can we have enough resources to take this business from X to try to take it to 5x rather than going from X to 1.5x to 2x and 2.5x. There is no other reason. I mean, the swap ratios, whatever they be, will come out of the valuation exercise. But honestly, that's the only intent that we have. But anyway, I will engage with you, Mehul. I will be coming down to Bombay and we'll be talking to all the shareholders.
No problem. My best wishes on whatever you decide, and hope both companies have a bright future.
Thank you, Mehul. I really appreciate.
Yeah. Another question I had was, you said that on treasury wise, you all make PBT close to 10%, and therefore, you are justifying cash in your hands. Now, I think HT Media and Hindustan, I think 2-3 years now, you are not paid any dividend. So, from a board is making a statement that money is better off in the hands of the company. Now, even if you go back to 2017 for Hindustan Media, HMVL, and you make 193 crores of net profit, your return on equity is going to be only 11-12%. So, is this money better off in your hands? No, at 10, 11, 12% return on equity? It is time to rethink. You don't want to do a buyback because you might reach the threshold. You don't want to give the money back to shareholders. So where is the shareholder going to earn money from? Market is not rewarding you. So, either you delist the company, give us value, or you give us dividend and, give value back to the shareholder. Some, proposal has to be there to think of the minority shareholder. So I would request the board to rethink on at least giving a token dividend. Let some money come back to the shareholder, because at this rate your equity will keep getting bloated. The return on equity will never look good. Market will never value it. Some thought is required on the capital that the company is holding back.
Fair enough, Mehul. I think your point on dividend has been made. I will, as I've said in the past, I will take it forward. But what I can tell you at this point in time, we have a plan to make substantial commitments of capital in HMVL behind these future-facing businesses. But there is enough cash, and I take your point. I will again put it on to the board.
Thanks, Pish.
Thank you.
Thank you. The next question is from the line of Hari. Please unmute yourself and ask your question. Hari, please unmute yourself and ask your question.
Hello, can you hear me, sir?
Yes, Hari, good morning. We can hear you.
Yeah, good morning, sir. My questions are regarding this news aggregators. They're getting much higher valuations than who we are, than us. Is there any strategy to get into that space, like news aggregation? And the other question is regarding this online ad share, which we are losing for the past debate of this online space. Is there any strategy to claw back some market shares in that?
First on the aggregators, or the news aggregation business, Hari, I'd like to say, you should wait for some time. We have some businesses that we are thinking. I can't exactly say whether they will be in the news aggregation stage. I absolutely understand that the market is rewarding or giving them a very high valuation. Obviously, we would also like to have very high valuation. Hence, we are incubating new businesses. As far as losing share on the online space, look, I mean, I don't know how you calculated that number, but one, on the online digital news medium, worldwide, the regulators are having a look at, the big companies like Google and Facebook, including our own regulators. Of course, we are participating in those conversations. How that goes forward is really up to the regulators and the legislators. But we are engaging with both Google and Facebook on one side and regulators on the other, to have a fair share as the news producers, hitherto which has not been coming back to the OEMs like us and was being taken by these big companies. So we are engaging with the government and seeing what best can happen in that area.
Thank you very much.
Thank you.
Thank you. The next question is from the line of Yash. Please unmute yourself and ask your question.
Hello.
Hi, Yash.
For a question, can you throw some light on this ad against equity business of yours? It seems now a lot of investment again is happening from HMVL. Can you throw some light how we are structuring the ad against equity business?
Yeah. So Yash, thank you very much. I think it's a fair question. Yes, it's not like a lot of investments are now again happening from HMVL. For the last couple of years, we have been doing this entire business from HMVL only. So we are not doing it. Earlier, 5-7 years ago, we used to do this business from HTML only. And for the last couple of years, we are doing only from HMVL. How they are structured is very simple. Think of it as a classical investment arrangement that we have, except just replace cash with ad space. So we are doing the classical valuation in private or public companies. Public is, of course, much simpler than private companies. We are putting our protective covenants and our rights package to protect the rights, our rights. We are then going into long-term deals with these potential advertisers who are either not advertising on any of our properties or whose market share is much less, trying to get that whole thing up. After the diligence is done, we are getting into the shareholders agreement. We are signing off the agreements, including the ad agreement. And then the advertisement begins for the next 3-4 years. And then obviously the overarching thing is then we are hopefully expecting to have a decent IRR on our investment. So it's a classical investment model happening only through HMVL. And all our platforms are available to these advertisers in whose company we go out and invest to make their investment. And hence we are extending, our market shares with these either new advertisers or with existing advertisers. We're taking up a market share. That's the underlying philosophy. Does that clarify your question, Yash?
Yeah. But one more question, Piyush. We are seeing there is a very big hit which is coming under OCI, other comprehensive income. And then you have this forfeiture income which which you keep on showing. Now it is almost to the tune of 56 crore. So that means what? These deals are not worth, and then you decide to forfeit.
No. So let me, no, not exactly. So Yash, look, accounting runs in a slightly different way. There are multiple lines in the P&L and balance sheet which gets impacted for accounting. So where does the forfeiture income come from? Forfeiture income comes from, there are contractual obligations on the counterparty to use certain level of advertisement, within phased manner. So, in the first half, these are 5-year agreements, right? So there are sub-terms. So if a particular counterparty does not use certain level of advertising, that advertising is liable to be forfeited, and there's a conversation which happens here. Now, on the other side, this whole piece around OCI or various other things that you are saying typically comes when we exercise our options, various options. We use different instruments to invest. It could be a convertible instrument. The valuations could be marked to the next round of fundraising. So there's a certain way in which accounting kicks in when you convert a CCPS to, let's say, equity, and those things go into different lines. So don't think that these investments are worthless, and hence, we are taking a charge thereof. But that's the way the accounting works. These are absolutely, the only thing is we are waiting for the liquidity event right now. Once, we have a line of sight that liquidity event will happen in the next 6 months, 1 year, we would like to convert our right to invest into pure equity so that we can get an exit, and hence certain accounting lines get impacted. Doesn't mean at all that these investments are worthless at all.
So, Piyush, can you throw some light out of the ad revenue that you have? How much is this revenue coming from ad against equity, percentage-wise, if you can give roughly?
Less than 10%.
Okay. Thank you, Piyush.
You're welcome, Yash.
Thank you. The next question is from the line of Vishal Bagadia. Please unmute yourself and ask your question.
Good morning, sir, and thank you for the opportunity. So
Hi,
if you could, hi, sir. So if you could share the realization per copy for English and Hindi for the fourth quarter as well as the full financial year.
Vishal, it's competitively sensitive data. I can only tell you that the realization per copy for the fourth year and indeed for the full year is on a uptick, consciously, not just for us but for the industry as such. We are passing on some part of the increased input prices to our readers, but I wouldn't like to speak out that numbers because it's a competitively very sensitive thing.
Yeah, no problem, sir. And sir, on the near term, are we seeing that these prices would go up or would remain to similar levels as of now?
Are you talking about realization prices or are you talking about newsprint prices?
Newsprint prices.
Vishal, I was telling to one of your fellow participants earlier. We believe, given the confluence of multiple things at this point in time, the macro situation and the geopolitical situation, that this commodity cycle will remain escalated at least for the next couple of quarters. So we believe that the pain will continue for the next 2 quarters. After that, it should stabilize and start coming down.
Okay, sir. Thank you. And that would be all from my side.
Thank you.
Thank you. The next question is from the line of Hari. Please unmute yourself and ask your question.
Once again, sir. Regarding
Yeah,
this,
hi, Hari.
yeah, thank you, sir. Due to this COVID, this physical leadership has gone down a lot. Is there any industry strategy and the company specific strategy to increase the physical readership again, sir?
Yeah, Hari. So that's a good question, Hari. So, if we break down this whole pandemic, after the first wave, which was really in 2020, the copies itself came down very sharply. And as you know, the readership is a derived number out of the number of copies. Right now, at a broad level between English and Hindi, our copies are already tracking to between 70 to 80% of the pre-COVID levels, depending upon which particular edition, which particular city or town, etc. And readership is therefore tracking back. So what I'm only saying, and we are in a situation where we are gradually building up our copies. So I don't think readership per copy has gone down. What happened is the copies itself went down and hence the readership went down. I believe now this year we will be covering the delta which has remained from a pre-COVID level. A substantial part of that would be covered this year, and hence the readership will also hopefully come to a pre-COVID level or nearby the pre-COVID level by the end of this fiscal.
That is all, sir. Thank you very much.
Thank you.
Thank you. Thank you. Thank you all. With this, we come to the end of the Q&A session. If you have any further queries, please reach out to the investor relations team. Our contact details are given in the investor presentation and are also mentioned on our websites. I now hand over to Piyush for closing remarks.
Thank you, moderator, and thanks to all the investors for participating in today's call. As you can see, we've in these trying times, we've got a decently good numbers across all our platforms, and we have growth plans, and we plan to come to you every quarter to showcase our performance, which we believe will be on a growth curve. We thank you for all your support, and we look forward to seeing you in the next quarter. Till then, remain safe and all the best to everyone. Thank you so much.